All right, guys, good afternoon. It's 12:20 on p.m. New York time, Friday, January 25th, 2019. Hope everybody's doing well. You had a great week. And as I promised, I wanted to do a follow-up video to this Euro Kiwi chart. For those that follow my channel, remember I did this video last week talking about the Euro Kiwi and what I had anticipated. So I don't want to rehash the whole thing, but if you go to my YouTube channel and watch this video right here from last Friday, Euro Kiwi, a textbook Elliott Wave lesson question mark, and you'll see what I'm talking about in terms of how this unfolded. And I said I was going to make a follow-up video to talk about if that's indeed how it went. And unfortunately, I'm sad to say that that's not how it went, and I wanted to kind of review that really brief. Because although it wasn't, again, with Elliott Wave, you do have definite points of ruin to help you with. So even though I was wrong, I had a definite place to get out, and I did have a small loss on it, but I took a small position size when it first was setting up in case I was wrong, and now I'm out of it. And certainly you can make an argument to go short here, although I don't think I'm going to go short. Just really brief for what I said last week without rehashing the whole video. Last Friday I said on the daily chart of the Euro Kiwi that this move down was like a textbook Elliott Wave, 5-wave move down, which it is. There's no doubt about that. And then I was looking at this move up as being part of a larger corrective wave. So in Elliott Wave, you have 5 waves down followed by a correction. And I was thinking that this would be what they call a zigzag correction, which is the most common, where it's an A, B, C, where wave A is a 5-wave trend, kind of like a regular motive wave. Wave B is a 3-wave trend down, and then wave C is another 5-wave trend up. So as of last Friday, we were about, let's see, 1, 2, 3, 4, 5. We were like right up here last Friday. I'm zooming down a little bit here. We were somewhere right around here last Friday, and so I was thinking that this low right here, where the crosshairs or the finger was the low of the wave B. So here was your wave A, 5 waves up, 1, 2, 3, 4, 5. And then I was looking at this as A, B, C down, and that's the end of the B. And then we were setting up to go up for C, which would be the final leg of the correction of this larger downtrend. And, if you remember, I was saying I wasn't really too thrilled with the way it looked initially, because now here I am down on the 2-hour chart. And again, here's the low of the wave B. All right, that happened back on January 16th. That was the low of the wave B. But if you look at this, like this first move up should have been a nice trend, and it really wasn't. It was kind of garbage. I mean, I really can't, from an Elliott Wave standpoint, I can't even really bother labeling this. I mean, this is not a 5-wave move up. And then you kind of had this down, and then, so really, and then again, as of last Friday, let's see, so last Friday would have been the 18th of January. So that was, let's see here, where were we? Somewhere around here. And then the market did go up a little bit, kind of chopped around, and as you can see, it started going back down again. And so from an Elliott Wave standpoint, this low right here, which I thought was the end of the wave B, is your point of no return, your point of ruin. So if price broke below this area, that I would no longer consider my analysis to be correct, which is, again, a nice thing about Elliott Wave. It gives you definite places where you can say, okay, well, it looks like you were wrong. And so that does appear to be the case here, in that we obviously took out this low. Here we are right now down here. We chopped around at this low. You can see right here we had 1, 2, 3. We had several bites at the apple at this support level, and it finally broke through earlier today, and it's been going down since then. And so I think that kind of invalidates my original view. Now, if I go back out here to the 12-hour chart, and look at this a little bit closer, I guess I could actually see this move down as a new trend. So if we, well, I'm going to leave that on there for now, but this could be a 1, 2, 3, 4, 5. And what was kind of reinforcing my thought the other day that this still was the low of wave B is that when I saw this go up, I said, okay, well, I could also look at this move up as a part of a downtrend right here, that this is wave 1, here's 2, here's 3, this was 4, and then we go down for 5. But one of the things about Elliott Wave is that wave 4 should not go into the price area of wave 1. So if this move down was 1, you can see these wicks here on the wave 4 going clearly are in the price area of this down move. Now they didn't close there, they closed actually just below it. And so that's a point of contention. Technically, that's a violation of a key Elliott wave rule that wave 4 cannot go into the area of wave 1. But clearly it did, although it didn't close there. So is it just the wicks, or is it the body of the candles that matter? So that is a little bit of a point of discussion. But clearly, that was not the end of this move down, and it's still going down. And so it pretty much invalidates this ABC up. Now, in the end, the trend was down, and so I guess you could just say you looked at this as a correction, but this move up is a pretty good trend, 5-wave trend. So again, if this had looked more like an ABC move up, then I definitely would have been selling it up here, but I didn't, and I got in, again, last week on this candle right here, and it did go up a little bit, and then I had a stop loss down here, and now I'm out of it. So, and that's fine. So, it's a learning lesson on a couple of points. One, again, the nice thing about Elliott Wave is that it does give you points of ruin, exactly, where you should be determined that you're right and where you're wrong. And I choose to put my stop loss there, and I got out, and I'm okay with that. I didn't take a big loss. I took a small position size to enter, and if there was follow through, I would have jumped a bigger position going up, but it never happened, so I'm okay with it. But the thing is you also have to be flexible too, and sometimes your pattern analysis is wrong, and that can happen in any technical system. But certainly Elliott Wave is no different. And this area right here is really what I think confounded me, is knowing how to interpret these wicks in this overall move down. Because if these wicks had not gone into the area of this, what it appears to be a wave 1, if these wicks hadn't gone up and spiked into this area, then I probably would have reconsidered that this was a wave 4 correction up, and I probably would have just gone short right straight out. But because of that, I was still looking at this as a B, and that this move up was the first push up. But again, down to the 2-hour chart, this initial move up off what I thought was the end of the B is garbage. I mean, just chopping sideways. There's no clear pattern in here at all. So that was my only warning that I suggested last week, that I was a little bit worried about. And as it turns out, I was right in that warning, and I probably should have listened to myself. But sometimes you're too smart by half, and that's the way it goes. And so the other little learning lesson sometimes is that although we tend to like to look at past price history to kind of determine, I think at some point you have to start putting aside some of this stuff and look at just what's going on right now. So if I slide this chart way over here, I can't really do that because it starts to throw off how the chart looks. But if you just kind of ignore this, you're just like, okay, well, what's the price doing right now? Well, it's down, and this is the daily chart. This is it on 12 hours on the 12-hour chart. I mean, clearly it's down. So even if I take all of this stuff off of here, I'll get rid of this. I'll get rid of this. And we just look at it without any labels. Say, okay, well, this is clearly a downtrend. And so that's what I'm going to take out of this. And I'm not going to go short right now, because basically, if this is a downtrend, this initial piece of it's going to be ending. So if this is wave 1, that's 328 pips. If this is wave 5, that's at 259. It might go another 50, 60, 70 pips possibly, and then end. So So I'm going to relabel this for now, and we'll see. I'm still not 100% sold on this, but for now we could be looking at this. Okay, where you know, we're looking at this as being a 5-wave move down, and what I say 320. That wave 1 was 320, so 320 here. Take you to around the 166.15 area. Move this one back. Did I say 166.15? No. What did I say? Sorry. 320 takes us to 166.25 or so. All right, so we'll leave it right there. So this area right here is about where I'd be looking for this downtrend to end, this initial downtrend, and then we'll see what happens. And that would complete the 5-wave trend. So anyways, guys, I just wanted to post that. You know, I mean, a lot of times I get these right, but sometimes you get them wrong. And, you know, that's kind of the way it goes, and you have to be flexible. But again, take away 2 things. One, Elliott Wave gives you definite areas where you know you're wrong, which again, this was not a wave B. And so when price broke through here to the downside, I was out, and I'm fine with that. And I have the psychology to say I'm not going to hold on to this and convince myself that I'm right. That was my exit, and I knew if it broke below that, I was getting out, which I did. And second of all, the second learning lesson is that, you know, concentrate on what it's doing right now. And although it's very tempting to look at some of this stuff from the standpoint of past history, that you can't always do that. You know, although this was a nice 5-wave trend down, you know, you really have to look at what's price doing right now. And I still think, you know, starting from the higher time frame is important to kind of get a view from the daily chart, which clearly the trend is down. And so instead of trying to, you know, look for that market to continue up on a correction, really the trend was still down. So anyways, guys, that's it. I just wanted to make that follow-up video, and I appreciate your comments or thoughts on it. Like the video, and I am still looking at potentially doing a WebEx to look at some charts and answer any questions from an Elliott Wave standpoint. I really can't address anything from other technical standpoints because that's not how I trade. But if you guys are interested, you know, drop a comment underneath the video and let me know. And I've had a couple of requests, but I really like to get some more buy-in. I don't want to be, you know, doing a WebEx talking to myself. So, all right. So that's it, guys. Hope you have a great weekend. And again, if you have any questions, please let me know. I'm happy to answer them. I know it can be confusing, but it's really not at the end of the day when you just understand the basic tenets of, you know, what an Elliott Wave pattern is and what it isn't. So, all right, guys, thanks again. Have a great weekend. We'll talk to you all soon.